Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is Kickstart video. Today's date is May 30th, 2024. In the Kickstart video, I take a look at three of the major currency pairs from a technical perspective: the euro versus US dollar, dollar versus yen, sterling versus US dollar, and try to make sense of the technicals that are driving this currency pair right now and how that may benefit you in your trading today. So let's get started. I'll start off this by looking at the 4-hour chart of the euro versus US dollar. And if you take a look at the price action yesterday, we had volatility early in the session, and then we fell and broke below the this blue line right here, which represents the 100 bar moving average on the 4-hour chart. Then we fell below this other blue line here, which represents the 100-day moving average. Getting below the 100-day moving average increased the bearish bias, and that momentum continued in trading today, with the price moving back down toward the green line right here, which represents the 200-day moving average. That was a key level. Also near that level is a 38.2% retracement of the move up from the April low to the May high. As most people know, I like to see the price move below the 38.2% retracement on any sort of corrective move to prove that the sellers mean business, but they couldn't do it. Instead, we found support buyers against the 200-day moving average, support buyers against the 38.2% retracement, and we since moved to the upside, getting back above the 100-day moving average, getting back above the 100-bar moving average on the 4-hour chart. These blue lines right through here, and that is tilting the bias, back to the upside. So what this price action tells me is that the sellers had their shot. They corrected the price lower. It's not surprising, because we did find resistance earlier this week against this high swing area right here. So the buyers turned to sellers right here, right near the 1.0887 level, and that momentum continued. But we did find that that dip did find support against that key support. Now we're trying to push higher. Taking a look at the hourly chart to see if there's any clues off of it. On the hourly chart, we look at the 100 and 200 hour moving averages above as potential targets on the top side. Now that level comes in at 1.0844. Now I would expect sellers to lean against that level. Why? Because we did find support against it through here for the most part before this volatility that we saw in trading yesterday, and then using that level as resistance right here. So with the two moving averages converged at that level, I would expect that if the price were to move up to that level, that we would see sellers leaning against that level, defining a trading range that may be between the 100 and 200 and the 200 and the 100-day moving on the downside. That is congruent with the fact that the price couldn't get below the 200-day moving average, 38.2% retracement. But we also did find decent resistance up here near the swing high levels this week. So there is this battle going on between the buyers and sellers. So look for the sellers against 100, 200 hour moving averages. That may be a good place for you to stick a toe in the water and sell the currency pair, the euro versus US dollar. So be aware, be prepared. Let's take a look at the dollar versus yen next, and I'm looking at the hourly chart in this currency pair. And what we've seen in trading here today for it is a move lower from what was the highest level going back in time to May 1. As a matter of fact, if I go to the 4-hour chart and take a look at that and go back to this day right here, May 1, remember we had intervention through here, and the price rebounded sharply after the intervention up to the 157.98.9 level. Let's call it 158. The price high yesterday got to 157.70, so got within about 28 pips of that May high. And started stalled and could not move any higher, and we started to rotate back to the downside. Going back to our hourly chart, that move lower today did find support buyers, coincidentally or not, against this lower trend line, which had a number of different connections right through here. So it connected once again right here and found some buyers. That came despite the break of the 200-hour moving average right here, which was the first break below that level going back to May 20th. So sellers should have come in on the break of the 200-hour moving average. They did, but we did find support buyers right through here, and we're moving back down toward this trend line right here. So if we break below this trend line after being back below the 200-hour moving average, that would open the door with a potential move down toward the 38.2% retracement on the move up from the May low to the May high. That level comes in at 156.13. And break below that level, then sellers are more in control here for the dollar versus yen. Close risk now comes right here against the 200-hour moving average. Other risk may be against the 100-hour moving average. Admittedly, the price did correct above that 100-hour moving average not once but twice in trading here today, but each of the times the market quickly found sellers against that level. So I would expect that the buyers had their shot above the 100-hour moving average on the correction, and they missed. And so I would expect that even if the price moves above the 200, that we should see sellers early against the 100-hour moving average in your trading here today. Finally, let's take a look at the sterling versus US dollar. Again, I'll take a look at the hourly chart, and what we've seen is that the low price in trading here today in the Asian early European session did find support buyers against this swing area through here, where we had a number of different swing lows forming this swing level. We also had different highs coming in place through here that helped to form this level as well. So a number of different times where the price either found support or resistance against this level, including this floor area through here. So once again, we found the floor and we found support buyers against that floor. And that level comes between 126.75 and 126.85, and we're seeing a rotation back to the upside. That rotation to the upside is now taking the price back up to the 200-hour moving average. Above it, we have the 100-hour moving average. In trading yesterday, we fell below the 200-hour moving average. We saw increased momentum to the downside. Prior to that, against the 200-hour moving average, we did find support against it. So I'm not surprised that when we broke the 200-hour moving average, we saw resistance. I'm not surprised that we see now resistance against the 200-hour moving average up here. For obvious technical reasons, if the price moves above that level, look for the 100-hour moving average to also provide some resistance. If sellers are inclined to sell against this level, then a rotation back down toward this level, and then the swing area through here would be warranted, followed by the 38.2% retracement and the rising 100-bar moving average on the 4-hour chart. So there you have it, a technical look, a Kickstart video of the 3 major currency pairs from a technical perspective, with levels that may be of interest to you as a trader here today, and explained why. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.